Okay, so is it visible to you? My screen is visible to you or not?
Yes, yes, you can see.
Okay. Okay, so today we will clear all the queries that we got today in the group based on how we would have entered into the trade at this point and catch this move, or how if you have missed this move, how you would have entered at this point and catch this move. uh, I told that guy that you need to use your strategy, whatever strategy you use, and the consequences of that strategy, and enter based on that strategy. So I give my opinion that how I would have entered in all these entries, and how I would have taken trade at this point. So first, and also I will cover that how to spot the absorption, and because the absorption mechanism in the base version and was different, and thus in this version the final version the absorption mechanism is different because the representation is different, and we are showing the data on each price level, what is happening at each price level. So we don't need a second candle to show us a follow through and spot the absorption. In this tool, the final version, we can spot the absorption even more accurately and more earlier than the previous tool. So let's move the chart at this point. This is GBPUSD, and the analysis that I shared in the group was market was somewhere at this point at that time, and I shared this analysis in the picture that price is moving down, price is moving down, but institutions are strongly, aggressively buying, and what they like to do. Uh, I cleared this thing so many times because that they don't want to hunt your stop loss or anything, because this will not give them any kind of profit or anything. They don't get any benefit in this to hunt your stop loss. They have market have the specialized algorithms that detects the patterns of the retailers. So all the strategies that you use, doesn't matter if it is ICT, SMC, supply demand, auction market theory, anything, any strategy that is available out there on YouTube, or people uses on any brokerage firm, or anywhere. uh, Institutions get all those data, and the algorithm that they have developed detect all those strategies, and they try to induce you in the wrong position before giving the moving to the right direction, or before giving the right move in the market. Okay, so there is a question that occur at this point. So because we can say that if they know that we are using ICT, we are using auction market theory, or we are using any strategy, and we are entering at this order block, why sometimes they give us a good reaction from there, and why sometimes they fail this order block. No matter we were maybe 100% right on our analysis, everything was good, why they still hit their stop loss? Because they need to the algorithm detects everything, and it creates a concept of probability or uncertainty in that thing. Because if they blocks or if they overcome all those patterns, and blocks all those strategies, like failed all those strategies that are out there in the market, and then they will expose themselves very easily. How? If a strategy is 100% failed, if a win rate of strategy is 0%, and it is failing every time, then you can very easily spot the market makers, that you can just do the reverse of that strategy, and you will be a very profitable trader. So they need to give you a respect sometimes, or to your order blocks, to your strategies, to your point of interest areas, so that you need to believe, your belief will not, what we can say, hurt at that point, that if your strategy is not working, sometimes your strategy will work. You will get a belief in your mind, sense of belief in your mind that no, yes, this strategy works, and sometimes it will not work. You need something to avoid the loss. Sometimes when your strategy works, then that's it. You don't need to think about it. And sometimes when it doesn't work, you need some tool or something that provides you the statistics and the information behind the candle, what is happening, what institutions are doing, and what they are trying to do with you. Okay, so at this point, when market was consolidating and market gave a sharp drop to the downside, okay, and what market does, market failed this fair value gap, or inversed this fair value gap, okay, and closed the body below this. And then what happened, then it retraces back and rejected from this fair value gap, and give you a this strong sell candle, which engulfs all these buying candles. So what market makers are doing, or what algorithms are doing, they are trying to induce you to enter into a sell direction. Okay, they are trying to induce you to enter into a sell direction. They will create every pattern that will induce your mind to enter into the sell direction. So you will definitely enter into the sell direction. And if you don't have any access to any order flow tool or the data where you can see the institutional positions, and where you can spot that what they are doing, what they were try that they are making fool of you, and what they are trying to do with you. Okay, so price action is just to create the patterns to induce the sellers to trap the retailers, okay, who are uninformed traders. Uninformed means who just rely on their lines on the chart, or simply the boxes they draw on the chart. Doesn't, no doubt, if I use auction market theory, I will also draw the box on the chart. But what does that promises? If I draw a box on the chart, does that box promises me that market will go buy from here? No, that will never promises me that market will go buy from here. Okay, that's just my anticipation about that area. When market will reach that area, I need to see the order flow. I need to see that what's happening behind the candle. Then I need to take the decision on that. So what order flow tools provides you the facility? They provide you the facility to enter into the right move, or to avoid the fake moves. So either you get a good trade, or you don't enter into the trade. Okay, so let's start this and see how. So when I shared this in the group, let me open. So I shared in the group earlier that market makers are aggressively buying, but they are showing you that price is moving down. So if market makers are buying, price will always follow them. Okay, so let's play the chart. Okay, they again give you a good sell candle towards the downside, which will break this area. So what they have done, they have failed this order block. Okay, they failed this order block, they failed that fair value gap. Okay, they give you a reaction from this fair value gap, and they give you a breakup of this support. So all the ICT traders will enter, smart money traders will enter from here, breakout traders will enter from here. Okay, so all the stars are aligned to enter into the sell direction. Okay, so but we knew that market makers are trying to go into the buy direction. So as we are in this area, critical area, we will simply turn our tool on, which is BigTrades Quant Analyzer. Okay. So if I turn this on, let me turn the footprint on. So I have done an update in this tool, and I will show you. So previously, this is how the footprint was forming. Sorry. Sorry. The footprint, this was a representation of the footprint previously. Okay. So I simply changed it. You can, if you added an extra option in that, if you simply turn the classic footprint option on, you will see the footprint like this. Okay, you can read this very easily. This yellow box represents the point of control. Okay, and all these green areas represents the sell buying imbalance, and red areas represent the sell imbalance. On the top, you can see the delta of each footprint. Okay, so let's see if we got any confirmation to enter. From here, we are getting confirmation that in this sell candle, we have buying aggression from the institution. But let's see, let's wait for the order flow to give us some sign to enter into the bullish direction. So let's play the chart. Okay, so what happened at this point? Market created a sell candle. Can you see this sell candle? Market created a sell candle. Okay, so I created this candle by myself by coding. So it is a small candle. I use the line chart, and in line chart you can see these candles very clearly. So market created a sell candle, and in this sell candle, what you can see, very small sell imbalance and very strong buying imbalance at each price level. From at the closing, you have the imbalance, this imbalance. The price level above that you have strong buying balance. The price level above that you have more stronger buying imbalance. Okay, so you have very weak and sell imbalance at this point, and you have very strong buying imbalance at the multiple price levels. And what else you can see here? The delta. What was the delta of the previous candle? If they are strong sell candles, the delta should be negative, but delta is positive at this point. What was the delta? This was a strong sell candle. Delta was negative to 25. When the next sell candle forms, because institutions were taking positions on the upside, delta turned positive 126 in this candle. And when this candle forms, which has strong buying imbalance at the different price levels, okay, and the delta was 334 at this point, very strong, double than the previous candle. But you can, if you can see, candle is the red candle. Candle is not a green candle. Candle is red candle to induce the people to enter into the sell direction. But we knew that at this point, this candle is a trap candle for the people who will sell. And in this candle, all these areas are the point of interest for us to enter in the buy direction. Okay, all these areas are the point of interest. So if we still don't want to enter in this candle, let's wait for the next candle. Okay, let's wait for the what happened in the next candle. In the next candles, in the next candle, institutions exposed themselves. Okay, so let me show you the candle first. Let me turn this off. Candle was next candle was very small candle, not a big candle like this. But the institutional activity that happened at that point was very big. Let me show you that what was the institutional activity. Let's see what is happening at this point. Market is moving down. In this candle, we got the strong buying aggression from the institution. In the next candle, institutions were taking more buying, even more buying at this level, because they try to buy at the dips. They try to buy the low and sell high. So in the next buy candle, what we got? Look at the difference between delta. Delta was 334, and then in the next buy candle, which was a clear buy candle, we got the delta 359. Okay, almost 360. Delta increased, and we got a strong buying imbalance at each price level of this candle. Okay, so that's it for us. We can clearly enter at this point. These are not 1 minute candles, these are 15-minute candles. You would have entered in a very earlier if you use the 1 minute chart. But if you don't want to use 1 minute chart, you use 15-minute chart. You can just go and use it on 15-minute chart. So on 15-minute chart, what we can see, strong buying imbalance at each price level. Okay, so now we are good to enter in the buy position. We knew that now buyers have exposed themselves. Okay, market makers were doing buying at all these areas, but they were not exposing themselves. Okay, but when they came at this point, they exposed themselves at this point. Okay, now we can enter at this point. We knew all the sell orders are closed, and now we can enter at these imbalances. This imbalance, okay, or you can enter at this imbalance. So as this candle is a small candle, we can enter at the starting imbalance from the start. Stop loss would be below somewhere at this, and let's turn the candlestick structure on, turn this off, and what would be the potential target? Okay, so potential target would be, minimum target would be this area, this line. Why this line? So when you click here, when market was falling down, institutions were buying. Okay, so they have all these buying orders at these areas. Okay, so they need to cover them in profit. They need to at least make all those and orders in profit. So we can target when the divergence started happening, when the institutions started to fake you guys or induce you guys to enter in the sell direction. We can target this area, this high clearly, because they were they were faking all these things, all this sell move from this area. Okay, so we can target this high. Okay, so it is around 1 to 6 RR, 1 to 6 RR trade. So let's turn the tool on. Let's see now the bubble chart. If we see the bubble chart, how we would have spotted the institution's activity at this point. So you can see we have small bubbles, we have bubbles which is bigger than that bubble, and we have bubble which is even more bigger than the all two these two bubbles. Okay, so I have changed a little bit of logic in that. Now you can read it very easily. So if the size of the bubble is bigger, it means there is a lot of buying happening at this point. Okay, if the size of bubble is smaller than this bubble, you can see that you can tell that there is this buying happened at this point, but small, less than this buying, less than the buying that happened at these areas. Okay, there is a buying happened at this point. Okay, so look at this bubble. Can you see this bubble? This red bubble. Tell me, can you see this red bubble?
Yes.
This red bubble means there's a lot of selling happened at this point that pushed the price. And when the selling happened, market give a follow through to that selling. What is follow through? That when they done this much of selling at this point, they push the prices down and close the candle like this. Okay, so the word follow through that I say, that means that market also push the prices down. If they done a lot of selling at this point, they need a follow through to that selling. They need a follow through to that aggression that they have shown at this point. So they have shown the aggression this point and close the candle like this. So when second time price reaches at this area, this imbalance area, what happened? Buyers try to push the price up, and you can see at this point, the green bubble. Okay, buyers try to push the price up, but they will get absorbed. Why I say the word absorbed at this point? But there was a strong seller at this point, and if buyers were not absorbed, they would have given a follow through to this buying aggression. But they failed to close the price above this aggression, and sellers pushed the price down. Okay, buyers were absorbed at this level. Okay, so the sellers pushed the price down and closed the candle like this. Okay, and in this candle, buyers showed their strong aggression. You can see from the footprint that this was the candle, this was a trap candle for the people, this sell candle. Okay. So let's play the chart and see how this is. That's how we would have utilized this area and entered into the position. We have not marked any volume profile. We have not marked any order block. We have not marked any zone. We just spot an area where the activity was happening, where by market was institutions were trapping the retailers, and we mark that consolidation. When market given a breakout of that consolidation, we need to spot the absorption or the buying aggression by the footprint, and we marked this area. We marked this area. Market tap into this imbalance and is giving us a clean buying move. Okay, so let's watch the chart and let's see market is also showing buying aggression. Seller or the market is giving a follow through to this their buying aggressive buying of the institutions. So let's play the chart. Okay, they are again try to push the price down. And now what happened? Because this was the area where the war was happened, but what was the war? There was some uh, orders that were maybe remaining at this point, selling orders to execute. They pushed the price down and then they absorbed all those selling and give a follow through. Let's play it now. So we knew that we got our take profit. So if someone have missed this move, how will he will enter in the next move? So what you can see here, when this candle forms, let's mark this candle. What is happening in the institutional level? What they are trying to do? When this buy candle forms, what happened at this point? What institutions are doing? Tell me.
They are selling.
They are selling and look at how strong is the candle. Okay, how strong is the candle? Nobody can think like this that institutions are selling at this point. But if you and maybe look at this point, look, mark this resistance area. Market close above all this resistance area. Now the breakup traders will enter at this resistance area. But if you can see here, they created this trap candle. No doubt they give you the take profit or TP, but they have done selling behind this candle. So the people who will enter buy at this point, they will trap them. Let's play the next. They took their stop loss, everyone's stop loss, who were trying to enter in the breakout trade at this point. But what happened in this candle? What happened in this candle? Tell me. What happened in the sell candle? Tell me, open your mic, tell me quickly. What happened when they created this big sell candle and what institutions are actually doing?
They started to sell.
Yeah, no. They showed that they moved the prices down, but they started to buy in this sell candle. Do you see this sell candle? When this sell candle forms, let me move the chart.
Oh, yeah. They start to buy. Yeah.
They start to buy. Okay. When this buy candle forms, they were selling. Behind the candle, they were putting the sell orders. Okay. So when the breakout traders will enter buy at this point, then you play the chart, they push the prices down and hit everyone's stop loss. So maximum stop loss that the breakout traders put at the previous 15-minute low. I knew the strategies, breakout strategies, that they put the stop loss at the previous 30 minutes low or the previous 15-minute low. Okay, I have also used them. I knew, and they hit all those stop losses. But what actually they have done in this sell candle is also a trap for the people who will enter in the sell direction. So anyone who is looking at this candle and is looking at the market reaches where market reaches at this supply area or the demand or the order block area. Okay, and market give a strong reaction from there. So now market has trapped the breakout traders. So now the people who will entering from this this sell order block, market is going to trap them. How? When market push the prices this much down, market has actually institutions has actually put the buying in this candle, aggressively bought at this candle. Okay, so they try to what they try to do, they try to what was the word? They try to trap everyone, induce everyone to enter in the wrong direction of the market before giving the right move. So let's play the chart. Let's turn this our tool on and let's move it up. Okay, so we knew that institutions are trapping at this point in this sell candle. When this much big sell candle forms, anyone would sell on the retrace because we knew now market is going to sell. So let's play the chart. But what they have done at this point in the next candle, they have put more buying aggression. They have bought more aggressively in the next candle. But look at the candle. How this candle? Look at the structure of this candle. So if you see the doji candle with the naked eye, you can't tell that before the after before third candle forms, you can't tell that where the market will go now. When you see this tool, you knew that in this doji candle that they have put the buying aggression. They have bought in this sell candle. Okay, you knew where the where the actual third candle will form on which side, on the buying side or the sell side. So let's play again. What happened at this point? They again aggressively bought at this point. And what else you can see here? Let me remove this. Let me remove this area. So this was the high. In this area, in this institutional chart, this was the high that they have made. Okay, in this sell candle. This sell candle was the high of the previous high. Okay, so that sell candle formed aligns with this green candle. Okay, so if you mark this green candle, okay, in institutional chart they have put a lot of fuel that will cover the high of this green candle. You can see it here. They have put this much of fuel. They have already bought more than that will take the prices up high of this green candle. Okay, do you understand what I am saying? Are you getting my point?
Yes.
You can see in the institutional chart this was the high, and in our chart this was the high, the same candle, and this was the high of that candle. In our chart we are ranging at this point, but in institutional chart they are putting the fuel at this point. This fuel will cover this fuel has already covered the high of this candle. So you knew when the breakout will happen, market will definitely go went and break this high of this candle. Okay, so now we are going to starting to observe the signs of absorption and look for an entry at this point. So someone was saying that how we would have entered if we have missed this move, how we would have entered. Okay, so I will use this footprint, or I will use this BigTrades tool to look for the absorption and simply enter. So now we will read. We got our direction. Now we will read the chart. Okay, so what just happened at this point? Seller buyers tried to push the price up. Let me use this. Buyers tried to push the price up. Okay, but what they have got, they have done so much buying at this point. You can see these bubbles, but they failed to give a follow through to this buying. Tell me, can you tell me? Can someone tell me that how they will give a follow through to their aggression? if they have bought at this point, if you can see buying imbalance or buying aggression at this point, how would be the follow through to this aggression? How? Tell me.
They buy again?
No. If let me create a candle at this point. I am trying to teach this point. When you will learn this point, you will get my point. So this is how this candle forms. The candle we are seeing. Okay, I am duplicating this candle. Okay, so they bought at this point of the candle. When okay, so they bought at this point of the candle, and what I am saying, when they took the prices up, when they took the prices up and done a lot of buying at this point, they need a follow through. They if they were strong, so much strong at this point, they need to give a follow through. They need to give a follow through to this buying. These are the buying aggressions. These bubbles are the buying selling aggressions. Okay, so how they give a follow through to the buying aggression? By closing the prices up. Okay, by closing the prices up. But did they have given a follow through to this buying aggression in this candle? Tell me.
No.
They have not given a follow through. How they would have given the follow through to this buying aggression? Tell me.
If the price broke above the
Yes,
high.
yes. If they take the prices up, okay, then the follow through will be given. So in the previous tool, what we were expecting, that they showed their aggression at some point, and now they need to give a follow through in the next candle to spot the absorption. But in this tool, the logic is changed, and you can spot the absorption very early on that and very accurately than that tool. So let me remove all these. Um, so when they push the price up, they fail to close the price. They fail to give a follow through to this aggression. And when they push the price down, sellers, they showed a sell aggression at this point, but they fail to give a follow through to this sell aggression, the bubble you see here. Okay. In the next candle, they again pushed the price down and showed a sell aggression, but they failed to give a follow through to this sell aggression. And buyers pushed the price up and close the candle green and show a strong buying aggression. Look at the size of all these four bubbles, and look at the size of this bubble. You can clearly say that this is the strong buying aggression rather than all these four bubbles. Okay, and they have also given a follow through to this aggression. Okay, you can enter at this point. If you don't want to enter, you can simply look for the next candle. What happened in the next candle? Next candle opened, moved down, tap at the point of control. You can see the yellow line. This yellow dotted line is the point of control of this candle. Tap at the point of control. So the point of control is a very important area. Why? Because from the point of control we get the reactions. Okay. Either we market will tap and go buy from there, or either market will break that area and go sell from there. So that's the what point of control will do. Market tab at this point of control, previous candle point of control, and showed a strong buying aggression at this point. Okay, sell. Okay, then showed a good follow through to this aggression and pushed the prices up. And then when the prices were this high, sellers again tried to push down the prices and showed the sell aggression at this point, but they failed to close the prices below than the opening price. If sellers close the final prices of the candle below the opening price, candle would be red candle. Okay, but it is a green candle, and strongly all the buying aggressions that formed in this buy candle market has given a follow through to them by closing green. Okay, by closing green, you can enter at this point. If you can enter at this point by simply placing this stop loss at this point. Still, if you don't want to enter at this point, let's read the next candle. In the next candle, what happened? The same thing that happened here. Look at this sell candle. Look at this sell candle. Do you see any sell aggression in this sell candle? No. Tell me, do you see any sell aggression in this sell candle? Tell me, open your mic.
No, no.
Why? Because buyers were enough strong at this point. This sell candle is to induce the people to go into the sell direction. This sell candle was the trap sell candle. You can see these strong buying bubbles, big bubbles. A lot of buying happened behind this candle. Why, if institutions have done a lot of buying behind this candle, market will definitely move up. So the same thing, same pattern happens at this point. When market open and price when price candle open and try to push the prices down, buyers showed their strong aggression at this point and absorbed the seller. Then you can see buyers showed a very strong aggression again at this point and absorb all the selling at this point. Then when at the opening buyers again showed their aggression, so there was no sell aggression at this point. So if you want to see the footprint, you can see the footprint at this point. If you are not enough satisfied to enter into the entry. So what is at this point? You can see we have only one selling imbalance, minus 53. What you can see here, the buying imbalance, plus 195, 197. All these are the buying imbalances and the buying imbalances. So if you can and look at that delta. Delta of previous candle was plus 49, but the delta of this candle was plus positive 93. So this shows a strong activity of buyers at this point. This can give you a very clear signal to enter into the trade. So let's move to the bubble chart again. So we would have entered at this point. We would have entered, the next candle, and put the stop loss maybe below or low or somewhere where else you are. And this was our clear potential target. We are not setting the take profit by any assumption that let's market will give me 1:2. How market will give you 1:2? How you can say this? We knew that from this point market.
Yes, it's visible.
Okay. So I was saying that we knew that look at the institutional activity. They have crossed the they have put the pot aggressively in all these areas, that this fuel will cover at least this candle's high in the retailer chart. Okay, so if we see the candle, this candle in the retailer chart, in the retailer chart was this green candle. Okay, so they have crossed this high at this point. So we have enough fuel to cross this high. We are not putting the take profit based on any assumptions that we made. Okay, so and people say randomly, let's target 1:2. How you will target 1:2? Anyone has told you from the stock market or the insider that we are going to give you 1:2? So you need to set the stop loss take profit based on very precise data. So let's play the chart and skip talking. Look, when market induced everyone, when market trapped everyone, they give a good strong aggression. Okay, at this point. So market at least give us our take profit. Okay, our TP has done at this point. So now it is again moving down. So let's read it again. It is again moving down, and the institutions are also selling. Okay, at this point. So let's again sell. Now they are again starting buying at this point. Let's play the chart again. Now look at this point. What has happened? What is happened at this point? Same phenomena that happened here again happened at this point. Let me. So in institutional chart, they have crossed the high of this candle, this sell candle. Okay. So in the retailer chart, let's mark this red candle and see the if the high of this sell candle has crossed or not. The high is not taken yet. Market is consolidating at this point. We can mark this high. We can mark this high. Okay. We knew that what is happening at this point. We knew what is happening at this point. Market is creating a fuel either to go buy or to go sell. Okay. But if we see quantitative CVD analyzer, market has already put enough fuel which will cross this high. So we got our direction clear. We got our take profit point clear. We just need to look for the entry criteria or entry signal. So let's turn the big trades tool on. Same phenomena happening again. Aggressively, market try to push the prices down. Buyers aggressively bought there. Sellers and no matter candle close sell, but there is no sell aggression in this candle. Let's turn the footprint on. Look at this candle. Candle was red, but if you see the footprint, there's a lot of buying aggression at each price level of this red candle. So if you see the footprint for you, this candle is not red candle. This candle is green candle. And look at the delta difference. At this point, delta was plus 145. But when this red candle forms, delta turns into plus 381. So this gives you a clear signal. All this buying imbalance gives you a clear signal to enter into the buy direction trade. So let's play the chart. What will happen next? Market went up from where? Market went up from these buying imbalances, tapping at this delta level, tapping at this point of control level. So look at this. Market give you a take profit at this point. Again. So call is went. Call is now got. The session has now been at least more than 40 minutes, and I think I have explained pretty much of everything. If you guys have any questions, please feel free to ask. Tell me if you guys have any questions about anything. Do you understand the absorption, how we spot the absorption now? Yes. So you,
Yes.
okay,
I
so
think I have a
sure. Go ahead.
I have a better understanding,
Hmm.
and please correct me if I'm wrong. But if I see a red candle with
Yeah.
a positive delta, does that mean there is absorption happening? That the buyers are absorbing the sellers?
So delta is the difference between buyers and sellers at a certain price level. Okay. Let me
Yeah.
turn this on
Yes.
and show you. So let's zoom in and see this, the last candle that formed. Okay. So if you want to see the delta, you will understand like this very clearly. Let's remove this classic footprint option and see the footprint that was previously. This footprint was very detailed version, and you may not understand this. So you can understand the delta at this in this. So at this price level, okay, what you can see, B means buying, okay, B means buying, S means selling. How much buying happened at this point? Maybe there were 814 contracts that were bought at this point, okay, or and there were 765 contracts that were sold at this point, okay. So buyers bought from the sellers at a certain price level, okay. So when the price is moving up, when the price is moving up, all these areas, there were in order book there were buying and selling limits were placed, okay. So when price moves up, when price moves up, it triggers all these sell limits, okay. So who they were selling at this point, who was buying at this point? Buyers are buying at this point, okay. So if there are more buyers at this point, okay, and there are less sellers at this point, what happened? They will tab at this point, absorb all those sellers, and if they have left some if the buyers are more buying, all the buying is not filled, they will push the prices up and try to buy at this point, okay. Market will move up because there is no one selling at this point. All the selling is all the passive selling. These sell limits are called the passive sellers, and these who buyers who were taking the prices up are called the aggressive buyers. So when price is moving up, what aggressive buyers are doing by pushing a placing market orders on their laptop or on their mobile phone, pushing buy sell buttons, pressing buy sell buttons at that point, and they were buying like this, okay. And how this selling is happening, simply there were a sell limit placed at this point, okay. So they are waiting for the buyers to reach at this point, and either to all when if all these orders are filled and there are still buyers remaining, they will push the prices up, and delta will turn negative at this point because there were sellers at this point, there were buyers were at this point. But what happened? Buyers were more in quantity rather than in sellers, so they absorb all these buyers. They all these sell limits were absorbed, and delta will turn negative and prices will push up. So let me show you here in the footprint what was happening at this price level. If you can read this, buyers were 814, sellers were 765. So who were more at this? Who were more in quantity at this point? Tell me.
The buyers.
Buyers were more in quantity at this point. So this is the sign of delta. So definitely delta will be, if you plus minus them, do the math between them. If you minus the sellers from the buyers, okay, so the difference will be 49. Okay, difference will be 49. There were 49 more buyers than the sellers at this point. So delta will be positive at this point. This is the number of buyers that were more at this point, and this is the percentage between them. There were 3.11% more buyers at this price level. So this is delta percentage. This is delta. So all those is to give you an understanding of what is happening at this point. So if you don't want to use this footprint, if you don't want to read this footprint, also you can have this overall candle delta. There were 2.773 K buyers in this sell candle, and there were 2.369 K sellers in this candle, and delta was 404 at this point, positive, and the delta percentage was 7.86. Just to give you an understanding that buyers were strong and more in this candle. Okay, you can see very selling imbalance at very one price level and very small, and all the buying imbalance. Okay, so the concept of delta is cleared or not now?
Yes.
Okay, so I have created
Yeah.
this classic view option on. If you turn this on, you can read it more easily. You don't need to look for the percentage or anything. When you will just see the chart, you can see that these are the buying imbalances. Okay, so and you can spot them by color. You can spot them by the plus option with them, the plus sign with them, the positive imbalances. Okay, how the positive imbalance form when the buyers were strong at certain price level, then the sellers. How the negative imbalance form. This is negative imbalance. Okay, how the negative imbalance form when the sellers are more strong at a certain price level rather than buyers. Oh, and this is the delta. This is delta value. I can turn it into the delta percentage, but I have not turned into the delta percentage. But you don't need to read the numbers. You just need to understand that numbers has increased from previous two candles. Delta was 189 at previous candle. Now it turned into positive 42, 420, and now it turned into 404. So that's how delta works. You can how positive delta increases by the strength of the buyers, how negative delta increases by the strength of the sellers. Okay, so all these confluence you have to align all these confluences, just and look for your entry or the best area or best time to enter in the trade. So do you have any questions? Anything else? Any question related to anything?
Yes, I think that is now clear.
Okay. If I give you a friendly advice, uh, like observe that the price action or the trading on the currency pairs, the forex pairs is very easy, because these pairs respect the price action very neatly, and gold, Nasdaq, all these things are very volatile. They respect the price action. Sometimes they don't respect. So, if the purpose of trading or doing all these analyses or reading all these things sheets are just to get a one good trade a day and close the PC. Okay, close your laptop or everything. But if you force yourself, if you still wants to be the Einstein and try to instead of you have all the easy pairs available and you still want to go for the difficult one and will lose the money, you need to think about it. You need to look for a pair which has a very clean price action like this GBPUSD. This pair has very clean price action, very easy to trade, very easy. Even a 1 year baby can trade it if we teach a one good strategy to him. So you can trade this pair or you can trade these kind of pairs, but that doesn't matter. You can trade any pair. You can use these tools on anything. They will provide you the accurate data on everything. It's all your choice. But I have observed this thing, and I was telling the same thing to myself that why I am like trading the gold and all those stuff. If I have these easy pairs where we can spot everything very easily, where the price action is very respective. So that's a very the advice
Yeah, I think
from a trader
EU
to
and
trader.
GU
Sorry?
are better, right?
Yes, better.
EU and GU are
Yeah.
more like the flow is better, like
Flow is very
it's
yes,
go
yes,
better in the flow. Yeah.
yes. They respect the transaction very clearly, very neatly. They don't just mark
Yeah.
big wicks
Just
and
one quick question.
yes.
Can you show the dollar yen, how it would look like?
Uh, what was dollar yen? So it is how to what is the code for that? USD JPY.
USD JPY, yes, correct.
Okay, so let's turn this off. Let me turn this off. Remove the noise. Go to this chart. This is pound USD JPY. So if you would have traded this tool today, this pair today, how you would have traded this? When you will open this, you knew that market was consolidating at this point. Okay, market was consolidating at this point. You have to look. You just message me in the group and give said please give us analysis of pound, dollar JPY or anything. I will share this screenshot with you. You knew that in all these consolidation, what was happening? Institutions were buying at these areas. So you would have build a clear understanding of the side where you need to trade. Okay. Market will not go for 1 year to the buy side. Market will give you a buy side move for a day trade. Okay, because we are looking for a 15-minute time frame. Market will give you a buy side day trade. Market went up, give you a buy trade. If you missed this move, you will again text me that give us the analysis. I will share the screenshot with you. You knew when market was moving down, what was happening? When market was moving down from this point, high point, till this point, market was moving up. Market was making, institutions were placing buy orders. Okay, they try to enter from the this most discounted price, which retailers don't enter. Okay, market was moving down, institutions were buying. You knew it was again entering into that consolidation area. This consolidation area is now the demand area because you already knew that buyers have put the buying orders at these points, and when the market gave an expansion, all those orders did not filled at once. Okay, so market need a retrace to come into that area to fill the remaining orders. Okay, so when the remaining order fill, market again gives you a buy move. Okay, so what happened? When you will see market is retracing down into that area, you see that they are again putting those buying orders. You will enter again from any simple engulfing. Maybe this is the beauty of these pairs, that you can simply enter based on simple engulfing. You don't need a simple market structure shift, fair value gap, blah blah, everything. Simple engulfing. If you spot the area correctly, if you have understanding of the market statistics, what is happening behind the candle, then you can simply enter based on the engulfing. You don't need difficult or complex trading system.
Can
Those
you
systems.
turn the circles on now just to see how it would look like? This, the bubbles or the circles. Yeah.
Yeah. So let's turn the BigTrades Quant Analyzer on. So let's move into let's uncheck these options. Then bubbles will automatically started appearing. So you need to uh, expand it and show it like this, because these bubbles showed you what happened at. So you can see clearly. Okay, let me show you. Can you spot the difference between size of this bubble, and this bubble? These three bubbles. What is the difference between the size of these three bubbles?
Yes, the green one is the bigger, stronger.
Yeah, the green one. And I have coded the logic. Only that bubble size will be bigger where a lot of buying taken place. Okay, where the lot of buying would
Okay.
have happened, only that bubble would be bigger. Okay, so if a lot of buying happened at this point, you knew that this area is the strongest area. And what
Yeah.
is cherry on the top? We have a lot of big bubbles happening at this point. You would have spotted this expansion move before this move happened, just because of these big bubbles. Let me move the chart backward at this point. So what's happening at this point? You knew that at this point, this was the sell candle. In this buy candle, you can see this strong buying aggression at the bottom. Who puts the aggression from the bottom? Buyers pushed candle from the bottom of the candle. Okay, buyer pushed from down to up, and seller pushed from up to down. You can started seeing strong aggression of the buyers, in next doji candle. What you can see, strong aggression of the buyers, You would have entered at this point. In the next candle. Maybe in the retrace, if it retraces. So let's see, our stop loss maybe did not hit. So I'm just showing you that how you would have entered at all these areas. That you can spot the buyers at these areas, okay? And what I was trying to show you, that when market is again coming to this area, when market is again reaching to this area, you knew that your demand area is now only this area. You will only this area. So we have a bubble till here. Only this area is your demand area. Okay. This is the area where you will try to look for the market to go up again. When market again came into this area, you can see a lot of buying happened at these areas. Let's see the footprint. If you are not satisfied yet, let's see the footprint. Let's see what is happening behind these sell candles. So behind this sell candle, you can see a lot of buying imbalances. There is no sell imbalance. Delta is 185 when price tap at this area. Again in next candle, all the look at the imbalance. If I zoom in this price level, this was the sell imbalance. What was the sell imbalance? Minus 5.50. And look at the buying imbalances, plus 114, 114, plus 12, plus 5. So look at the difference between buying and selling imbalances. Okay. So you can easily tell that who is strong at this price level, who is strong at this, who is dominant in this sell candle. So when you get a second candle that engulfs the previous sell candle, and look at the difference between delta. Delta turned from 126 to 552. And look at the imbalances in this sell candle. 200, positive 200 and 211, positive 17, 216, 44, plus 9.
What the yellow squares mean?
Yellow
Where
squares
the
means the
yellow is?
yellow
Yeah.
square is the point of control. Okay.
Okay.
Point of control of this candle. If you use the bubbles, you can see the yellow dotted line on the candle. Yes. And if you see use the footprint, you can see these yellow boxes. So yellow boxes represents at this price level. This was the point of control of this sell candle, and you can clearly enter at this point. You got all the confluences, you got all the reasons to enter at this level. So does it make sense to enter at this price level? You have spotted everything. You have read what is happening behind the candle. You mark the area based on the imbalances. So these green bold lines represents the imbalances. You have marked the imbalance area, market tap into the imbalance area. Okay. It absorbed all those sellers. It absorbed sellers absorption happened at this point. And when this engulfing happened, you maybe happened entered at the start of the next candle, or the retrace into these areas, and you would have catch all these caught all this move very easily. Okay. So do you have any questions left, or do you have any confusion left about footprint, about the absorption, how to spot it on the any chart? Or
The best time frame to use?
no, there is no best time frame. It depends
Oh.
on your trading approach. Like if you are good to trade, if you easily trade on the 1 minute, if you have the courage to trade on 1 minute, like if I open my entry on 1 minute, candles move like very fast up and down, and that gives you the heart attack at every price level. If they are market is going against you, but trying to make you make a wick, but you can't bear the that wick. Even you knew that market has to go buy from this, but you can't stop your control your heart at that point. So if you are weak hearted like me, you need to trade on the 5 minute, 15 minute. Okay, you can trade on 1 hour, 4 hour, daily, weekly. You can trade on 1 second, 1 minute, 3 minute, 5 minute. So it's all up depends on
Well,
your
everything
own
now it
trading.
will show relatively. If you change it to 5, 15, or 1 hour, all is
Yeah,
relative. So if you put it on 1 hour, it will show you like the same
yeah.
relative to the 1 hour.
Yes, yes. It will show you relative to the 1 hour. Okay. So in 1 hour, it is more. So if there someone is swing trader, positional trader, he can use it on 1 hour. Okay. So in
Yeah,
this
no, it looks good.
consolidation,
Looks good. We have to study this, right? Yeah.
so sorry, if you were in this consolidation, and you don't know where market will go, and if you see from this candle till this candle, what was happening? Institutions were buying at this point. Okay, let's mark this candle. Let's mark this red candle. So from this red candle till here, institutions has from this red candle till here, this point, institution has put a lot of fuel that it will when the break where side the breakout will happen, and when the breakout will happen, where the market will go. Market will definitely tap at this high of this red candle, which we have marked at here. So you don't need a complex strategy. Just mark this resistance area. When market will give a breakout like this red candle, open a bigger lot at this point, because you have a great confirmation that market will give you a breakout of to the buy side. You market give you a breakout. You have the range left till the high of this red candle. You have opened this. You need to open your orders at this point, cover this area, and sleep peacefully. So when you have the order flow tools, when you have the data, which most retailers don't have, you can create your own strategies. Okay, so order flow tools are enough complex to give you tough time. You don't need to complex your strategy too. Your strategy should be simple. Your strategy should be very easy, and the effort you have to put is to understand the order flow tools, is to understand the market mechanics, and when to enter and what is the right time for you. Okay, so anything else? Do you have any confusions or left?
At this moment, not anymore. Yeah,
Okay,
have to study it right actually now.
sure. We will do live sessions further in the future. So if any questions left in your mind, or do you have any questions in future, we will clear all those queries. And if you are trading any pair, anything, simply drop on the start of the morning that I need analysis of this trade, this pair. I will simply open the 30 minutes or 15-minute chart and give you what is happening on the institutional level, and you can expect uh, maybe that buying or selling from and you got a clear understanding that on which side you need to focus on. If market is going down, you don't need to enter into these sell positions. Okay, you knew that institutions are moving, taking the prices up. You will wait for market to come into the right area. You can simply go into the buy direction, take the buying trades. So if the institutions are buying, okay, so you got the direction clear for the day by this tool, and you can maybe it will make your trading easier.
Yes, I think it will definitely help us.
Yes.
And I just wanted to say thank you so much for your time, for this opportunity. I really
Thank
Yes,
you.
appreciate.
really great, Usman. Thank you very much.
Thank you so
Really
much
happy for that.
yeah, thank you so much to you guys to for joining the session. And some people ask me that show us your verified FX journal, blah blah. So this video will be on the YouTube. So this message is for them. I am not a very like a big trader or big influencer. I have my strong expertise in programming and coding. I have very strong background and I have 4 5 years of experience in programming. I was a senior software engineer and I left my highly paid job, and because I had interest in trading, and I left my highly paid job and I learned everything, every strategy, every trading style, every method which is available in the market, which you have ever heard about it. Okay, I learned everything. Then as my expertise, the major expertise were in programming. I coded something which is very useful for the people who were trading in the trading view. Okay, so if you want to check my credibility, you have to use my tool and you can question me on that. Okay,
I don't doubt your credibility, man.
yes,
What you are showing is
yes,
really,
you can question
really
me on my
next
tools.
level.
You can
No, it's
question,
next
yes,
level.
on
Thank
my
you.
tools, but you can't question me. I am the same. I'm the same trader as you are. I am also mastering and learning these things. I'm also I am not a trader who is in a losing phase. I am also trading from a long time, and I have lost many funded accounts, many things. But now I have left the phase where the losing phase. Now either I end my day in profit or in the break even. Okay. So what I am trying to do, you have seen many times I shared my trade screenshots without hiding the lot sizes. People hide their lot sizes just to make a curiosity on the mind that maybe if it is he's a mentor, he will be taking 10, 20 lots. No, I took 0.01 lots. That doesn't mean I don't have any money to buy 100K accounts or anything. No, have money. I am very good, financially good. I don't need if never no one buys my tool, that doesn't makes anything in me that I don't get in loss. Okay, I can use this tool to improve my trading. I am improving my trading. I use the smaller lots. I try to be consistently profitable. Okay. So after a period of time, after a few months, when I will be consistently profitable trader by using smaller lots, I will then definitely buy 100K account and I will open the bigger lots. So if you try to skip the middle steps of the ladder and try to jump to the last step of the ladder, you will never be successful. I defined a structure for myself. I only take 2 trades a day or 1 trade a day. If I find good opportunity in London session, I take the trade. If I find good opportunity in New York session, I take the trade. And I have 2 different strategies for London and New York session. And I try to be consistently profitable. I use 0.01 lot because I don't need to waste my more money based on bigger accounts because currently I am trying to be consistently profitable. Okay, so that's the thing. So anyone, if you are watching the video, if you are not in the our group, and if you are thinking that all these people who have joined this session are maybe my team members who are maybe praising me or anything, you simply join our Telegram group. I have put the link in the description. Join the Telegram group and look for yourself and join the Zoom sessions. Everything is free here. I don't charge for any mentorship, anything. I will post the mentorship of auction market theory for free on the YouTube after the launch. Currently, I'm very busy in different things, and I try to teach the premium things for free because I don't want to charge for the knowledge. I will definitely charge for the thing which I have put my so much effort I have which was these tools. So rather than that, I will never charge for anything. I don't take money to give you a good advice. Okay, no matter if you are if you are a buyer of these tools or not, I will definitely give you a good advice. Okay, and I will definitely try to clear your concepts on the order flow and everything. So I am not the guy who is very expert in everything. We are all of them. All we are all learning, and maybe at some point you guys will teach me something which don't know, and at some point I will try to clear the concepts of you guys. So this is the reason of creating a community, so we can grow together at some point where if you guys have any good strategy, anything which is very good, very high rate of high profitability rate, simply tell the strategy to us, because we are not the person who try to stick with anything. If something is profitable and we knew that, and we are not using that, we are not that kind of guy. We just need money from the market. We don't need a title from the market that I'm ICT trader, I am auction market theory trader. No, I just need money. Okay, no matter what strategy will give me money, I will definitely use that strategy. So in all the examples that I have showed you guys, I have not used any volume profile or anything. I just show you based on the um common logic, common engulfing, based on the uh, what bubble chart is showing, what big trades are showing. So thanks again for your time, and thanks again for joining the session, and
Thank you.
hope you guys have a good day, and see you again. Take care.
Okay, God bless.
Bye bye.
Thank you.
Thank
Bye.
you.
Bye.
Bye.